Good evening, everyone. Wall Street was talking about Mario and the world economy today. We're talking about Mario Draghi, the head of Europe's central bank. Investors are disappointed that he said he will wait a bit more before launching a stimulus plan to boost Europe's economy. Those Draghi comments dampened speculation that Europe was ready to copy the U.S.'s bond buying program known as quantitative easing. But there is still hope that Draghi will announce a fresh round of bond buying and other stimulus measures if needed early next year. So stocks sold off and then rebounded, ending with modest losses. The Dow lost 12 points, the Nasdaq was down 5, and the S&P off by 2 points. Steve Liesman breaks down today's actions by the European Central Bank and how they impact investments here in the U.S. and around the world.
A confusing press conference from the president of the European Central Bank, Mario Draghi, that first weakened the euro and then strengthened it as the market scratched its head over whether Draghi was being hawkish or dovish. Let's go through what happened so investors can maybe figure it out for themselves. Draghi first made dovish comments when he said that increasing the size of the European balance sheet is now a matter of policy. So rather than expecting to add €1 trillion, the Governing Council now intends to add it. But then Draghi went somewhat hawkish, saying they would consider quantitative easing or buying bonds towards the end of the first quarter. Some, however, had hoped for a decision as early as January. But then Draghi definitively said the ECB would act without unanimity. That is, consent of the Germans who are worried about hyperinflation from too much action by the central bank.
We don't need unanimity. It's an important monetary policy measure. It can be designed, I believe, it can be designed to have a consensus. I'm still confident. But we have to remember that we have a mandate.
Asked if buying sovereign bonds was illegal, Draghi got tough and said not buying the bonds could be illegal.
A QE program, which could include sovereign bonds, falls within our mandate. Not to pursue our mandate would be illegal.
Investors here are paying close attention because those sharp currency swings could have a big impact on their overseas investments like European mutual funds. More stimulus by the ECB could weaken the euro, undercutting gains in European stocks when they are translated back to dollars.
The Fed is on the path towards raising. The ECB, the Bank of Japan are on the path towards easing, and they're going to take more action. And so all these moves make the currencies very unpredictable. And I think if you're going to invest in Europe, you should be thinking about the stocks without the euro.
All these comments by Draghi amount to another incremental move towards quantitative easing by the European Central Bank. The market, though, is both tired of European incrementalism, but after 6 years, accustomed to it. The ECB is moving towards outright QE and will do so without the Germans. For Nightly Business Report, I'm Steve Liesman.